All right. All right. Cool. Okay, you know what we do? Usually we sit around here for a couple of minutes, say hello. I wrote this all out, so I'm going to read it. Should be pretty simple today. Be in and out. You know how it goes. Hope you guys understand. I like doing these YouTubes in the middle of the day. It just seems so much easier now than like before. We'll give it a minute and then we'll get to reading. Okay, 30 seconds. I hope you guys are having a fabulous Friday. I know it's been a couple weeks since I did my last live. I like to sparse them out a little bit. And then when I see something that I think really warrants talking about, either I go off the top of my head, everything that I can think of that can be introduced, or what I like to do is also sometimes I like to write it out. And writing it out is what I did today because I figured it would be easier for me to retain my thoughts and to keep everything going if I just simply wrote it down. So I'll start reading. It says, I know not many are aware of it, but don't look at the exchange rate as being unstable. Okay. The exchange rate is beyond its MCP guidelines of 2%. To me, that indicates that this is more of a float, erratically, unmanaged, because it is unstable because the MCP is now being exposed for the corruption that really took place with even the introduction of a multiple currency practice inside of the establishment of Iraq, with no written policy to back up currency. And just to say that the dinar is valuable because the central bank says so, finance minister says so, is not enough. Written policy was needed and it was ignored. Now, look at places that have MCPs that have huge GDP growth that are tied to oil. Those countries really don't exist because those countries are typically stable, running correctly, with very, very valuable currencies. Those currencies are also backed by written policies and government that also have a belief in those currency, as do their people, as their market, and as their financial ecosystem. Those places don't really exist. Stability comes from the fact that you have people, purpose, and you have the opportunity for the currency to thrive in its own economic, ecosystem, where it is not in competition with other currencies. It is the only currency and the dominant one, which is the rightful place of any monies of any sovereign nation. There remain strong economic and legal reasons to retain a policy on MCPs. While MCPs have been approved by the fund in particular, what we're talking about is the IMF, in particular circumstances, broader use remains objectively because MCPs are distortionary, meaning that they're volatile. They create unfair competitive advantages and disadvantages and hamper trade. Hence, you see the people always going on. What happened at the end of January? They joined the Arab Fund and their stock markets being sold regionally, and they updated their NASDAQ. That's an easy one. So the core principles of the current policy remain appropriate, but in Iraq's instance, they're inappropriate because they don't have policy behind the currency. And it should not cause unreasonable deviations in FX spreads. Hence, one market saying, parallelly speaking, that one dinar is equal to 1460, 1470. I just answered your question. Hence, on the other end, in the market in the street, the currency's risen all the way up to, let's say, almost 1700, 1720. That's an unparalleled market and it's unstable. That is not an MCP because it violates the 2% spread. The core principle of the current policy remains appropriate, namely that official action should not cause unreasonable deviations in FX spreads compared to normal commercial costs and risk. However, this policy is outdated. The current framework was put in place after the formal abomination of the par value system and the entry into force of the Second Amendment of the Articles in 1978, and has remained virtually unchanged since. While the original policy was closely tied to the operation of the par value system, if you want to look that up, please do. It's post-1978 framework. It was sought to adapt the MC policies to a new world of floating exchange rates. Hence what I said earlier. This framework has, and in many ways, served the fund well, notably by acting as an important deterrent of distortionary practices in exchange systems. However, significant changes in FX markets, including greater experience with flexible exchange rates, substantial deepening and standardization, and the development of hedging products, call for sweeping review of the policy. In addition, the policy has proven increasingly complex and very difficult to apply. These implications for policy mean that actual policy needs to be implemented by the government of Iraq and with its members, its caucus, its businesses, its citizens, etc. Now, I also contend that the authorities allocate FX outside the auction at a different exchange rate. Get it? The auction? Or the auction rate, difference from the market exchange rate. Meaning that if in the market, people are forced to buy it at $14.70, but at the auction they're selling it for $1,700, that's a disparaging charge. And those differs from the market exchange rate, and these rates differ by more than 2%. In addition, a multi-price auction also gives rise to an MCP. Get it? They think the dollar is going to be more valuable than the dinar because it is. That affects the supply and the demand of the currency, hence the disparaging rate. Now, if you look at this from this point of view, and this is why I say I believe that I think it's floating, a floating exchange rate is one in which the value of the currency fluctuates in response to supply and demand. Get it? Citizens don't want the supply, they're demanding dollars, hence it's off. The interplay of the market force of demand and supply determine the currency's value. Rather than government intervention, the currency's value reflects public confidence in the country's economy. This is exactly Iraq. Put simply, the value of the currency in a floating exchange rate depends on market forces. Get it? Devaluation, valuation, all these things plays a major part in all this. We also call it a fluctuating exchange rate or a flexible exchange rate. Now, there are pros of this. Now, if it is this way, it's auto-correcting. Self-correcting market forces determine the value of the currency. The system automatically adjusts to any changes in supply and demand, which is happening now. Better protection from external events, such as the war in Ukraine and other things. The country's currency will withstand the economic movements in other countries more successfully when there is free movement of the demand and supply. So they need to increase the demand and then make the supply readily available so the domestic economy has protection to change the global economy. The government has more freedom. Specifically, it has more freedom to determine what its domestic policies are. A floating exchange rate self-corrects any balance of payments, imbalances that a domestic policy may cause. So the root of a lot of this is just their domestic policy. And that's why you're seeing Ali Al-Awlaq meeting with the Fed. You're seeing that the central bank people are meeting with the protesters. The demand, obviously, is they want the dinar to have a greater value, hence a better value, and in some instances, a way greater value than the dollar. And so it should. But to eliminate the MCP is to eliminate the corruption. Eliminate the corruption means you mean to enact policy. When you have policy, then you can have auto-correction. And I believe then you'll start to see them zeros drop and for things to get a whole lot better in the immediate future. We've already seen them join the stock exchange. We've seen NASDAQ upgrade their payment system. We've also seen now that they've met with the Fed. They're going on February 8th to go over there to meet with them again, all about the exchange policy of the dinar against the dollar. Now, Ali Al-Awlaq has already surpassed his 1 week that he said that he was going to change the exchange rate. He asked the people today, please give me 2 more days. That's Saturday and Sunday. So we have to wait and see what happens. But I thought it'd be very interesting that people would celebrate a super high exchange rate and not really understand what the multi-currency practice means, how it affects you as the investor, and also why the people of Iraq are so upset. They've been educated that their dinar is worth something. They expect and they hold the government to make it worth something. And that's why I say I'm not worried about the date. I'm not worried about the rate. I'm worried about the policy. And I'm worried about the ways to protect the investors, to indemnify them in the process in which we are investing. All right, y'all. I hope you guys liked this little video. If I give you guys something, have a great weekend. Have a great day. If we're looking for something a little bit, check that out. That's some of these things in here were nuggets, bombs. I hope you enjoy.